Good afternoon, everybody. Welcome to the Moving Markets Podcast. My name is Jeffrey Dunyan. I am the host of the podcast. I'm also the CEO and the founder of Safe Option Strategies. Very glad to have you here on a Monday afternoon or whenever you might be listening, and excited that you're going to be a part of what we're doing here. Let me get my camera on here. There we go. There you go. Now you can see me. I can't see you. I have no idea where you're at, but welcome. Glad to have you here. I'm back in my own office. A couple weeks ago, the week before the 4th of July, I was literally out of town doing this from a different location, but I'm back home at my office, and I hope you enjoyed the week last week, shortened trading week, kind of a fun, active week, but nonetheless, I hope you enjoyed it. I hope you had a good 4th of July. Even those of you that are outside the country, because I know we have a few listeners that are not in the country, but even those of you that are outside the country, I hope you had a good midweek break from the markets. If nothing else, you had one less day that you had to worry about trading and worrying about positions, and so hopefully that was enjoyable for you. So really quickly, let's do a recap of where things finished today. I'm going to look at my other screen here. The U.S. Markets today, the Dow Jones Industrial Average finished up 209 points, the NASDAQ up 24 points, and the S&P up 10 points. That's less than 0.25% each on the NASDAQ and the S&P. That's a little over 0.5%, almost 2/3% on the Dow. Nice little bounce back up after some sell-off last week. Last week was kind of a rough week. Before I go any farther, before I forget, let me really quickly say this week's episode is sponsored by Hurley Investments. Hurley Investments LLC is for higher net worth individuals. If you've got a net worth or a portfolio that you trade that's $500,000 or more, you should check out Hurley Investments LLC. Go to hurleyinvestments.com. If you reach out to consult with them and ask them if they're appropriate for helping manage your money, if you mention that you heard about them, on the Moving Markets podcast, you will get a personal consultation with Kevin Hurley, the owner and founder of Hurley Investments LLC. I've known Kevin for a lot of years. He takes good care of people's money. His customer service is outstanding. If you're going to have someone else trade your money, that's the place to go. So check him out at hurleyinvestments.com. Okay, so 3 things I want to talk about today. Last week, the president and some of his surrogates went out on the national campaign trail to try and promote and talk about Bidenomics. I'm going to talk a little bit about Bidenomics and what that means to you, and most importantly, maybe what it means going forward for you. I want to talk a little bit about some of the economic reports coming out this week, specifically the CPI and the PPI reports. And then Friday morning of this week, there's a little bit going on Thursday afternoon, but Friday morning of this week, earnings season is officially and formally kicking off and starting. And I say this pretty much every quarter, this earnings season could be big. This could be a big one. And it always is, but maybe not always in the way that I want it to be big or in the way that I think it should be big. So let's start off. Let's talk a little bit about Bidenomics. So I love hearing liberal commentators, whether it's in financial news, whether it's in the more general U.S. news. I love hearing them talk about all the things Joe Biden can run on, all the accomplishments that he has. And they always point to a couple of things. They always point to inflation coming down. They always point to the big bills that he has got passed and signed, specifically the big giant COVID relief bill, I can't even remember. The Inflation Reduction Act, which man alive, if something comes out of Washington, D.C., I'm telling you, whatever it's called, whatever it's titled, it's probably going to do exactly the opposite. But the Inflation Reduction Act, one other big giant spending bill, and lower gas prices and inflation coming down. Those are his accomplishments. Those are the things he's running on. So this is my feeling about Bidenomics. And I'm going to, this morning, as I was watching former governor of Arkansas, Mike Huckabee, father of the now governor, Sarah Huckabee Sanders in Arkansas. Shout out to my friends and family in Arkansas. I love that state. I love Northwest Arkansas. I'm trying to get my wife to green light moving there. Anyway, the let's go to let's talk about what I think Bidenomics means, and let me get back on track here. Former Governor Huckabee said, selling Bidenomics as a positive thing is like trying to sell people Camp Lejeune bottled water. You can't watch the financial news. You can't watch CNN, MSNBC, CNBC, Fox Business News. You can't watch any of these channels and not see the ads for the lawyers that want you to become a part of the tort case for people that lived on or near Camp Lejeune and drank the water, and they're all going to die now. They're all poisoned. And I hope that doesn't happen. I'm being a little facetious, and maybe I shouldn't be, but Camp Lejeune had a problem with their water system. Everybody got poisoned, and now all these attorneys are trying to get people to pile on to these big class action lawsuits to go after the government to pay maybe billions of dollars to anybody that was at Camp Lejeune over a certain period of time. So the water there was horrible. So why is Governor Huckabee saying that the selling Bidenomics is like trying to sell Camp Lejeune bottled water? Well, the simple reality is Bidenomics sucks, and it has been nothing but bad for the country. And I'm shocked every time I see a poll that says something like 60 to 65% of the people in the country think the economy is going in the wrong direction, and 35% think it's okay. And I'm wondering, who in the world are these 35% of people, and what kind of fantasy land are they living in? Are they people, and I suspect this is the case, are they people who are going to say nothing but positive things because they are so hardcore liberal, hardcore Democrat? They could honestly watch Joe Biden or Hillary Clinton or Kamala Harris. They could watch them commit a murder on live television with hundreds of witnesses there to see it, and they would look you in the eye and say, well, that needed to be done, or that was a good thing, or that didn't really happen. I mean, these are people that are so far gone. It's just absolutely staggering. You can like Joe Biden, and you can be a supporter of the Democrat Party or a strong liberal, and you still have to face reality, and you have to pull your head out of the sand and recognize that every single thing in our economy is worse than it was 2 years ago. Everything, without exception, worse than it was 2.5 years ago. Inflation numbers are coming down month over month, but inflation is still going up. It's not inflation that actually coming down. It's the rate of increase in prices that is slowing down. Folks, that is a big, huge difference. That's like saying a car is out on the freeway speeding at 120 miles an hour and is endangering everyone, but each successive mile it goes, it's coming down a mile or two in speed. If the posted speed limit is 70 and the freaking car is going 120 miles an hour, and 6 miles later it's only going 114 miles an hour, and 6 more miles down the road after that it's only going 108 miles an hour, that car is still speeding. It's still a danger. It's still out of control. It's still going to cause harm. It's still a bad situation. And that's what inflation is doing. Last year in July, it peaked at a little over 9% increase year over year. And now the increase is around 4% year over year. It's still going up. It's still 9% last year plus 4% more this year. It's not going up as fast, but it is still going up. Now, look, is it better that the car on the freeway is slowing down gradually? Yes, it's better than if it was accelerating or still going at that top speed of 120 miles an hour. But does the car need to get back under 70 miles an hour to be safe for other people? Yes, it needs to. Until inflation is at or below 2%, which is what the Fed is trying to get it to. It sucks. It's still going up. We're still paying more month after month after month after month. We're still paying more, and those prices continue to go up. They're not coming down, or they're not going up at a slow enough rate that the increase in wages and the increase in earnings and the increased money in our pocket is keeping up with it or surpassing it. So if Biden and his surrogates want to go out on the campaign trail and say, look, inflation is coming down, that's great, but you're the people that caused it to go up to historically high levels, 40+ year high levels, and it has not come back down to a sustainable level yet. That's like saying, hey, we're the drunken idiot at the wheel of the car that went up to 120, but it's okay because now we're down to 110 miles an hour, or now we're down to 100 miles an hour. So everything is fine. You should be happy. You should be ecstatic that everything is better. Gas prices have gotten lower than when they peaked out, but they're still something like 70% higher than the day the man took office. And gas prices are still higher for one reason and one reason alone. And the day Joe Biden went into office and was inaugurated, he signed multiple executive orders that were a direct attack on the oil and gas industry in this country. And we're behind now. We were a net plus producer of oil, meaning we produced more oil under the previous administration than what we needed in this country, and we're a net exporter of oil. And now we are a net importer of oil, and there's no real relief on the horizon. Have gas prices come down from the highest they were? Yeah, they have. It's the same analogy. Apply the exact same analogy with the car out speeding on the highway. It's going to kill somebody. It is killing people. It is causing damage. It is causing harm. Is it going as fast as it was going? No, but it's still going way too fast. Gas prices are still way too high. Oil prices are still way too high. And I don't see any relief in that. Go right down the list. Every accomplishment they're claiming they have is a negative thing for the economy. And it's okay. You don't have to be like me and think that this man is the biggest buffoon and the biggest fool who has ever sat in the White House. I feel that way. You don't have to. We could still be friends and disagree on that, I hope. But you got to pull your head out. You got to, and not just out of the sand. You got to pull it out of anywhere else that it might be buried right now, and figure out that this man's economic policies are bad for the country, and they want to spend more. They want to tax and spend more, and it's going to make things worse than they are. So, look, it's the reason I stay very hedged and stay very bearish overall on the market. I'm just not buying into the fact that things are getting better. Is inflation coming down a little bit? The rate of increase is slowing down, and that is a good thing. And I credit Jerome Powell. I'm not a huge fan of Jerome Powell, but he has stayed consistent. He stayed on message, and he continues to raise rates. And is it going to push us into a recession? I think so. It hasn't so far, and I'm in that group of people that thought it would have already happened, and I was wrong on that. But it's coming. I really believe that by the end of this year, or the first quarter of next year, I think we will have 2 consecutive quarters in a row with negative GDP. And no matter how the media and the Democrats and the liberals want to try and redefine what a recession is, the reality has been since the word was invented, an economic recession is 2 quarters in a row of negative GDP. Doesn't matter if it's only slightly negative, doesn't matter if it's negative for a couple of quarters and then it pulls back into positive territory. A recession is 2 quarters in a row of negative GDP. I think we're going to get that, if not before the end of the year. I think it'll be 4th quarter of this year and 1st quarter of next year. So I still think it's coming. I'm wrong on when I thought it was going to get here, because I thought it would have already been here. All right, so second subject I want to talk about, CPI and PPI data. We've been on the subject of inflation. This is a perfect segue into it. We're going to get new CPI numbers. We're going to get new PPI numbers this week. Consumer Pricing Index and Producer Pricing Index. Both numbers are projected to come down again from where they were in the previous month. But interestingly, the CPI numbers are expected to stay almost exactly the same as they were at last month. Excuse me, I'm sorry, the CPI numbers are projected to be the same year over year from where they were, and show no real decrease from year over year. So it's going to be really interesting, because we've had this situation where the numbers were going up really steep. They're not going up as fast, but they have not turned and gone back down. It's only the rate of increase that has slowed down. If now it stays steady or starts to tick back up a little bit, you're going to see the stock market sell off in a big way. And I think it's a possibility. I've predicted a couple months in a row that it was probably going to be a higher number than projected, even if it was a lower number than the previous month. And I was wrong. It was at or better than the projections were. Um, I'm going to stick with my mantra. I really do feel like I'm the guy crying wolf. I'm the guy that's cried wolf so many times, and it hasn't happened that people are saying, yeah, he's wrong every time. Well, uh, I'm not going to be one that overly celebrates just because I'm right one time, but I got to tell you, it's not looking good, and I think you got to be really careful about how you're set up in the market, how your portfolio is set up, whether or not you're hedged going into this latest round of numbers. Um, and that's respectively on Wednesday and Thursday that we're going to get the CPI and the PPI data. Then on Friday, we're going to get consumer confidence numbers. Now, interestingly, those numbers are not going to be reflective of the most recent CPI and PPI numbers. If it were a snap poll and you theoretically had bad CPI and bad PPI numbers, then you might see consumer sentiment way down on Friday. But these are going to be numbers that were taken previously and are not going to factor in what happens with this week's CPI and PPI numbers. Okay, last thing I want to talk about, and then we'll wrap up our podcast for the day. Earnings season. As of so. There are a couple of companies that report after the market closes on Thursday. I know Pepsi is one of them, and right now, this second in time, I am forgetting. I'm going to find it really quickly, but I'm forgetting who the other one is. But we're starting in earnest. Oh, Delta Airlines. I can't believe I forgot Delta Airlines because I'm invested in Delta Airlines. I have stock in Delta Airlines. So Delta and Pepsi are the two big ones on Thursday morning before the market opens. After the market closes on Thursday, there's not much going on in the way of big companies that everyone recognizes and knows real well. But on Friday morning before the markets open, you've got JP Morgan, you've got United Health, you've got Citigroup, you've got Wells Fargo, you've got BlackRock. There are some others, but those are all big names that you've got to watch. And from my perspective, earnings season officially starts when the market opens up on Thursday morning with some of those reports, but it really gets going and gets ramped up on Friday morning. And then next week, you're going to have some of the other banks. I believe JP Morgan will be either on Monday or Tuesday before the market opens, or maybe Wednesday. Bank of America, Charles Schwab, Morgan Stanley, they all report on Tuesday next week before the market opens. Lockheed Martin is also in there. After the market closes on that day, you've got not as many big ones after the market closes that day. And then on Wednesday morning, there's where Goldman is. Wednesday morning, Halliburton Wednesday morning, US Bancorp Wednesday morning, NASDAQ reports Wednesday morning. And then Wednesday afternoon, probably the biggest one that most people are going to look at Wednesday afternoon is going to be Tesla, Netflix, United, IBM, Alcoa. There are five big names. Tesla and Netflix, I think, are going to get the most attention. Can't ignore IBM or United Airlines, but Tesla and Netflix are going to get a ton of attention when they report next week, Wednesday afternoon. So earnings season is always a fascinating thing to me. It's always really interesting to me, and not always for the same reason. Last earnings season, I think expectations were so horrifically tamped down that it wasn't hard for companies to beat. I think it wasn't hard for them to beat on their top and bottom line. Top line being revenue, bottom line being actual profit after expenses. I think it's going to be tougher this time. I don't think expectations have been pushed quite as low as they were last time. More importantly, I think it's going to be a bigger challenge for companies to really guide well and really project a strong outlook for the next couple of quarters in the next year. A lot of companies will give you their year-long guidance, or at least their next 1 or 2 quarters guidance. And I think it's going to be a little bit tougher for them to impress Wall Street and impress the professional traders, as well as the average the average Joes like you and me that trade our own money. I'm Very interested in Tesla. Full disclosure, I own shares of Tesla. I'm very invested in Tesla. I own shares of Netflix and have for a really long time. And so I'm very, very interested in what those two companies do. Tesla, I think Tesla is going to knock it out of the park. I actually do. I think Tesla, whatever you think of Elon Musk, the man knows what he's doing in the way he runs his company, Tesla. Now, you could question whether or not he's doing as good a job, obviously, with Twitter. I think he accomplished what he wanted to with Twitter. And even if he loses money in that deal, I think he exposed a lot of the bias that was going on in social media platforms. And I hope he continues to expose it. We'll probably save it for a conversation next week, but talk about Meta and their new platform, Threads, and how that's already pulling some significant market share away from Twitter. In the end, I think it would be good to have a couple of big names that are sort of competing in that space, and maybe the two of maybe two big names like that keeping each other honest could be a good thing. So, all right, earnings season is going to be fun. I guarantee when we're doing the podcast next week on Monday, there will be a lot of talk about those companies that reported early. Specifically the JP Morgan, Wells Fargo, BlackRock, Citicorp that reported on Friday of this week. We'll have a lot to talk about on that, and we'll be talking about what actually happened with the CPI and the PPI data and how that's going to impact things going forward and what the market reaction was to it in the couple of days following. So hope you're having a great week. Hope you had a great holiday week last week, and hope your summer is going well. I'm going to sign out. Thanks, everybody. Bye-bye.